Hey guys, welcome to the channel. My name is Shaurya Srivastav. I'm a full-time trader and I'm making this video because I've been working on a new strategy in trading Nifty options. So this is what I'm trying to do. I'm trying to take a week-long positional trade on Nifty options of the week ahead. I think this sort of a strategy requires low time investment and also would give you quite a decent result of around 2 to 3% growth within a week. I think it's ideal for anyone who's doing their job and is looking for some income on the side with a very low amount of time investment. So I'm going to break down the strategy to you with the numbers, the logic, and why I'm taking these positions. So before we get started, just a quick disclaimer. These are my opinions and I could be wrong about my judgment of the market. So let's get started. This is what I'm going to broadly do. I'm going to look to sell one OTM call option above and one OTM put option below. Once I sell either of these, I'm going to be looking to back these with covers. So if we combine these four, we'll be forming our iron condor. So I'm going to be telling you how to pick these four values in this video with the complete logic and analysis. So let's have a quick look at where the market is at. So as you can see my screen, Nifty is currently trading at 14,890, very close to the 14,900 mark. We are currently on a Thursday. We are on 29th April, Thursday, roughly towards the last half an hour, at around 3 o'clock right now. So with very little time to go, the market is looking to stagnate around this 14,900 mark on the Nifty. And the previous 2 days have been really bullish. In fact, the last 3 days have all been positive, as you can see. The market has jumped up significantly this week from the 14,300 series to about the 14,900 mark. And we will be taking positions keeping the 6th May contract in mind, which is next Thursday or roughly 1 week ahead. And we're going to plan a strategy for that day or building up to that day. Given the way the last few days are going, I would be very conscious that hey, maybe the market is sort of bullish and is looking to move upwards. But considering that it has already been 3 days, it seems like it's sort of finding an upper cap here. I'm currently on a 15-minute chart, and let me just quickly get in a broader time frame as well. I've switched to the 1 hour candlestick, and as you can see, this level as to where the market is today is very close to a previous resistance around this mark, and I'm just going to quickly make a line there. And as you can see, so this looks like a very strong resistance zone. This is the 15,000 on the Nifty, looks to be a strong resistance, and we can expect limited movement considering it's at this stage upwards. So so that's where Nifty is at. And now, given this information, let's look at some other parameters that will help us decide our options. So now I've opened the Nifty option chain, which is a list of all options and various data parameters associated with it. We'll use some of this information to quickly pick these four values to form our iron condor for the week. So the market is currently here, which is the 14,900. We're going to quickly look at this value called the OI. The OI is quickly going to tell us how many lakhs of trades are being made on each of these strike rates. So if I quickly look at the call side has people betting on the 6th May expiry Nifty options in across this belt. If you see some of the strong values, there's a large amount of people here, which is the 15,500, which is 14 lakhs. You have a large chunk of people also betting on the 15,600. If I quickly look at this value, the delta value, which is a probability of this failing, right? So, or the probability of the market hitting these values, we can see that this is at 8 and 5 or 8% and 5% chance of failure. So these levels personally to me look good, which is the 15,500 and 600. You can just go with the 15,600, but the unfortunate bit is that it's only trading at about 8 rupees at the moment. I'd probably take the 15,500, which is trading at about 13.6 rupees at the moment, which is significant premium for me to catch. I could cover the 13.6 or the 13.6 rupee premium with maybe somewhere around this, which is the 15,700, trading at roughly 5 rupees. And for the put side, let's just quickly look at where the volumes and OI is at. You have a lot of people betting on this level, which is the 14,000, which is nearly 900 points away, right? So there's 14,000 is being traded by a lot of people, has a delta of only 6, so there's only a 6% chance of failure. So this looks really safe to me. I like the sound of that, and I'm probably going to go with this. It's trading at roughly 17 rupees. I could sell this put and I could cover this or buy the probably somewhere around here, the 7 rupees, right? The main reason why I have picked these four, you can see that I've given myself roughly 900 points on the put side, so that gives me enough safety in case there is a sort of like a crash, because given the state of the current market, there is room for the market to move down. We have already seen that the market is at a higher point and it is at resistance. So I don't expect heavy movement upwards. Hence, I've gone with a tighter window on the upper side. So we have gone with only 600 point gap on the upper side. And we have given ourselves nearly 900 points on the lower side. We roughly have 5 working days to go from now. So if you came in tomorrow and if the market opens roughly around the same levels, you could potentially take something around the levels that I've mentioned. Let's do the quick math as to what potential profit you could make. Be careful in case you plan to use this information to make trades. You'll have to sort of look at these day in, day out and accordingly adjust. So considering that I do not adjust any of my positions over the next 5 working days, let's quickly check what is the probability and the math of how much we're going to make. Okay, so this is what I've done. I've added the 4 options that I mentioned onto Opstra. Opstra is this website through which where you can simulate your option trades and see what is the probability and how much you can earn. So I've added the 4 options that I've mentioned. So as you can see, the plus stands for buy and the minus stands for sell. So I'm selling the 14,000 PE and the 15,500 CE, roughly trading at 17 and 13. And I'm going to be buying the 13,400 PE as a cover, and I'm going to be buying the 15,700 CE as a cover for the call side. And with this combination, I've really set a really wide range to cover for 5 days of movement. We've taken something of very low risk. As you can see, there's nearly an 87% chance of success. It's extremely low risk. Just to know, you will roughly make about 2.33% of profit if you run this down all the way till next Thursday. You will have a rough investment of 60,000 rupees to create this combination. On 60,000 rupees, you'll roughly make about 1,500 rupees, which is roughly 2.33%. Even if you catch about 2%, I think that's good enough. And just so that you know, 2% sounds very small, but that's 8 to 10% for the month. And you do that over 12 months in a year, and you're going to have more than 2 times the amount of money that you invested that year. So it's a massive return. So do not underestimate the value of 2%. I hope that you're able to use the information in this video to learn more about options and understand how options work. So let me know if you want me to do this week in, week out. I think somewhere around Wednesday or so, I can put this video out again and again, telling you what you can do across the week with very low risk and catch your 2 to 3% of profit. I hope you had fun watching this. Thank you for your time. Be safe and don't forget to set stop losses in case the trade does not go in your favor. Thank you very much.